Starting this video with dollar index daily time frame. First of all, this was our bullish trend which we call dollar strength, and this was our top. Now it is coming down. The happiest person after this drop in dollar index will be those politicians whose country is saved from bankruptcy, because after this high there was only one resistance, 120, and now they can make fool of their voters with any fake story, but their country saved. And for retail trader, question is what next? So this was the bottom of this trend, and this is top. Right now price is coming down, but it is still our retracement level, and we know price don't stop until it hit at least one retracement level. So our first 38% target is 105. This is our first support, and it is near the horizontal support level. Then 50% retracement at 101. So this is your first support zone where you can expect a counter trend retracement in dollar index or a sideways correction. But after CPI last week things has changed, but question is still same, how they will achieve that 2% inflation target. So before CPI there was this ABCDE possible triangle chart pattern, but breakout gave us clarity. This trend line broken and this chart pattern both at the same time. And if we switch to weekly time frame, then focus on these two last resistance, then this level is now our support. So this retracement zone from 50 to 38% retracement level has a big support level. So there is a good chance this drop in dollar index stop between these two level, because this was the beginning of bullish trend, the race for inflation control, and this is first drop, and this was your last bearish trend of dollar index when Fed started QE monetary policy. Since coronavirus everything was happening very fast because of President Trump, that is why he says sleepy Joe Biden. So things happen very fast. To get same like last time this bearish trend of dollar, we again need QE monetary policy. So this was your rate hike trend which we call QT, and next will be QE. But before that there will be rate pause, and that trend has been started because after CPI one thing has confirmed that in next FOMC meeting there will be 50 basis point rate hike, while in previous FOMC meeting Fed was doing 75 basis point rate hike. Then slowly rate hike size will decrease, then we will get 25, then in last there will be no rate hike, then after there will be rate cut trend, then in last there will be QE monetary policy. And main goal of this Fed monetary policy is to get 2% inflation target, and before that we will have a recession in USA, in rest of the world. To avoid that recession, Fed is reducing that rate hike size. Then in March rate hike will be completely over and we will have rate pause trend, and we have to wait where will be inflation at that time. Till then it can make a sideways correction in this support zone, because next bearish trend of dollar index will be something like that, retracement up to 50% level 101, then counter trend correction, then making new lower low. But again the question is 2% inflation target, and if deep recession start before 2% inflation, then Fed will start doing these two things, rate cut and QE. But this bottom can survive because this is stagflation cycle, and this trend cannot over until this stagflation cycle is over, because gold has survived that coronavirus market bottom. Same thing can happen in dollar index. Will this bottom will survive or not? And these buyer will try to protect their entry. So this support zone between 105 to 101 is a key support level, and it is horizontal area. And if you see bottom of this complete trend which was made in 2008 in last recession in USA, since then it is going up, it is making higher high higher low, and it is a clear uptrend, while everyone was saying that dollar will collapse. And this trend line again proved as a resistance, and next dynamic support will be lower trend line, because this is a parallel channel. Because in stagflation, and if you compare the complete trend of dollar index, this was the last trend of dollar, and you can see this trend was only ended when that stagflation cycle was over, and before that top there were multiple drop. So there is a possibility before Fed 2% inflation target, recession panic increase, and for the politics, Fed target shift from inflation to recession. And if that happen, Fed will do everything, the rate cut and ultimately QE monetary policy. And when recession is over, then they will start hiking interest rate again until inflation go back to 2%. So if this happen, then after some retracement it can make bottom, then keep going up again. So this 105 and 101 is a key horizontal support, and be prepared up to 61% retracement level, because this can be temporary relief to all of these countries who are going bankrupt. Then after retracement it go up again, because strong dollar and lower oil price both are good for lower inflation is USA. So you can watch H1 or H4 time frame as a retail trader, but you have to focus on weekly time frame, and this is your key support zone area. And if we see daily time frame of Euro USD, first of all it break out this parallel channel, then came down and made 61% retracement of this last ABC wave. Then after that it is flying. Basically technical confirmation came way early than fundamental. So these were technical trade, and new higher high came after confirmation from CPI. So this is your bottom and this is your top. Right now you can say it correction or trend reversal, but as long as this low survive you will consider bottom. So first of all our support was 99,521 and resistance 35.21. So this was our nearest resistance. So there is a possibility it can make counter trend retracement, but this level breaks again, then your next target will be 65.49. This is again a horizontal resistance level, and this was the low made when market was crashing during coronavirus. So basically you can say this is bottom when QE monetary policy was started, and this was the top before QT monetary policy was started, and this is your bottom when QT monetary policy is starting, and next will be QE. So after that you can expect a sideways correction, because now everyone will wait till December FOMC meeting until we see officially 50 basis point rate hike, because that was rate hike trend and which is ending, and next will be rate cut trend. And after this correction pattern, which can be ABC, zigzag or chart pattern, but focus on these horizontal support and resistance level, because on Euro USD daily time frame you have lots of clear horizontal support and resistance, so that will be very easy to trade for beginner intraday trader. And if we see USD JPY H4 time frame, first of all this was our top, and this was when Bank of Japan was selling dollar. So these central bank knew early that dollar will stop, and in the last Fed is changing his monetary policy, and this symmetrical triangle before breakout was already available in Telegram channel if you have missed that entry. Now support is broken and last low is also broken. So if this support level also break, then wait for breakout, then sell retest, and next target will be 131, because this is our key horizontal support level. Since beginning from top, our first correction pattern was triangle, so next correction will be zigzag, which can happen before breakout of support or after breakout, but under both condition target will be 131. So if market make counter trend correction, then resistance will be 145 area, and you can sell on retracement level, which can be something like 50% or 61% retracement level. But till December FOMC meeting and till rate cut, this pair can be in downtrend correction. And if we see GBPUSD daily time frame, it bent up on QE monetary policy, came down on Fed QT monetary policy. And if you see carefully, then this pair give clear signal compared to everything. It made clear top before downtrend was started, and it made bottom when nobody was believing that Fed QT monetary policy is ending. And now after CPI, when everything become clear, it is flying. So top to bottom you can draw retracement level, and if retracement happen, then you can buy at retracement. If it make zigzag correction or a chart pattern, but this is the top and this is the bottom of your QT monetary policy, and we have this resistance zone, and these are horizontal resistance zone, so that will be easy for you to trade. And if it keep going up, then you can get a short term selling opportunity, or if this level break, then we will buy on retest. Then we will target 26,476 resistance level, because all of these bulls will wait for clear confirmation in December FOMC meeting, and this trend can last up to March, when there will be change in monetary policy which can be rate cut. You can trade any forex pair but focus on dollar index, and this is your key support zone.